What is going on, investors? Hopefully you guys are doing well out there. That is right. It is Friday. I hope you had a great week because it's time for the FAANG Stock Recap Show here on the Investor Channel, where every Friday we recap all the major news and the technical chart patterns from all the major FAANG stocks, including Microsoft and Tesla. This week, we've got Tesla cutting prices. We've got Apple cutting production on some of its most popular products, and we've got Amazon cutting even more workers. Let's kick things off like we always do with Meta Platforms. This stock is in rally mode. This week started at $125, end of the week $130 on the dot. That's 3.28% over the last 5 days. Over the last month, this thing has rallied up 11%, but not a lot of news out of Meta. Maybe that's why it's rallying. Moving on to Apple, started the week at 130, bounced around quite a bit like a lot of these stocks. Ended the week basically flat after being up over 3.5% today. This is after Apple remains a Wedbush top pick, firmly remains a Wedbush top pick, and adds that the tech sector looks to be overlooked. They did lower their price target on Apple to a 175, considering the stock is at 130. That still would be quite a move. Apple should be at $250 stocks. All the analysts are lining up and pumping Apple. That's according to Loop Ventures' Gene Munster. He says that the stock could reach $250 by next year. That would basically be a double from where we're at. Apple dipped below a $2 trillion market cap as it reportedly cut MacBook, Apple Watch, and AirPod orders through key suppliers. We'll certainly see evidence of this. I believe I told you last week the tentative date for Apple earnings was January 26th. Now I am seeing it being February 2nd. They're still about a month away, a little less than a month away from earnings. We'll certainly get an update on the sales. Now, you do get a little bit of read on sales when you look at Apple suppliers. Foxconn, obviously being the most critical one of that, reported that December's sales jumped, and it was one of the biggest months ever for the company as revenues rose 14.2% month over month, but it was down 12.3% year over year at Foxconn. My guess is we'll probably see Apple be somewhat similar. Apple is hiring a Disney executive. I don't know if that's a good thing if you've been looking what's happening with Disney, but they hired an ex-executive at Disney to head Apple TV Plus marketing. Danny Strauss was formerly a head over at Disney, leading Disney Plus and Hulu as well. We'll see how he integrates into Apple TV. Moving on to Amazon, started the week at 86. Like a lot of these stocks kind of bounced around a little bit, but ended up flat after a monster rally today on Wall Street, up 3.5% to finish the week flat at about $86 per share. Amazon workers in the UK planned their first ever strike. Representatives of the labor union says people working at one of the most valuable companies in the world shouldn't have to threaten strike action to win wages that they can live on. Well, I got news flash for you. Amazon is one of the world's most valuable companies at $847 billion, but they're trading 76 times earnings, meaning they actually don't make any money. Amazon is to lay off over 18,000 employees. This is after the company planned to cut about 10,000 roles. This was confirmed by Andy Jassy, which is the Amazon CEO. These will be kind of your white collar workers and not your blue collar workers in the actual warehouses and factory, where I'm sure Amazon has a lot of turnover anyways. And so if they wanted to lose or lay off warehouse workers, they can probably just let the churn kind of let them run out the door, so to speak. Now, Amazon lining up $8 billion unsecured loan to support its growth. This is probably why Amazon is on a 52-week low, is because they are firing 18,000 people, relatively well-paid people. They are also securing $8 billion in an unsecured loan at a relatively low interest rate. It looks like kind of overnight financing plus 3/4 basis points is not expensive money at all. But if Amazon, which reports their earnings also, it looks like on the same day as Apple on February 2nd, if this company was pumping out the free cash flow, would they have to go and borrow $8 billion? Would they have to up the number of layoffs? Would they have to play hardball with UK workers? Probably not. So you can imagine those February 2nd earnings over at Amazon probably going to be a disaster from a cash flow perspective. Moving on to Amazon, start of the week at $295. This thing is just chugging right along, up 6.8% this week. Finished the week at $315. This company is the first to report their earnings we're looking just 2 weeks away on January 19th. Over the last month, though, slowed down a little bit, up about 2.4%. You stretch this out to 6 months, this thing's up 71%. And what I'm thinking is you had Netflix and Meta have the biggest falls last year. Well, those stocks appear from a technical perspective looking like they are going to rally the hardest. The WWE is looking to sell its entire company. It is a publicly traded company at about $88 per share. Let's click over to WWE. It's only, and I say only, about a $5.4 billion market cap. My guess is you'd have to give some kind of premium to get Vince McMahon to walk away from a business that I believe he might be second or third generation owner of. But if they were to sell the entire company, the likes of Comcast, Fox, NBC Universal, maybe even Amazon and Netflix potentially buyers, maybe even Disney as well. We'll see if this entertainment property comes up for sale and if Netflix makes a play for it. Moving on to NVIDIA, started the week at 148, ended that basically on the nose after a hard 4% rally today. NVIDIA fell, though, earlier in the week as Bank of America expects the gaming sector to largely normalize following a dinner with the CFO. They are saying that they're still seeing solid demand for their new RTX 40 series cards that were released, I believe, about a month ago, and that finally at the end of the current quarter, which ends in January for NVIDIA, the gaming channel expected to largely normalize. Not necessarily saying that it's going to spin back to higher growth, but maybe the declines in that sector are going to start to normalize or flatten out a little bit. NVIDIA is going to partner with Foxconn, obviously the aforementioned major manufacturer for Apple, to develop autonomous electric vehicles. What is missing from this headline is actually a vehicle platform and not actually the vehicle themselves. Certainly NVIDIA very, very much involved in that. Moving on to Google, start of the week at $90. This one did not bounce back, down 3.25% to about $87. That's despite rallying over 1.3% today. This is after the company rose as Tigress Financial reiterates a buy, citing cloud and search strength over at the company. We'll certainly see maybe some evidence of that or the lack of evidence of this when Google reports their earnings on January 31st, so right at the end of the month. ChatGPT creator OpenAI is in talks for a tender offer at a $29 billion valuation. One of the investors, it appears, could be potentially Microsoft as well. We'll talk about that when we get over to Microsoft. Now, speaking of Microsoft, start of the week at 243. This one did not hold up this week, down 7.8%. It's really, when we come over here and look at the technical chart over at Microsoft as well, it was just one of those that was actually setting up at the top and brought back, down 7.8%. Not quite in the beautiful buying zone, but we're getting there. That's despite rallying about 1.5 today. Finished the week at about 225 on Microsoft. This is after the UK is reviewing that Microsoft Activision deal that is going to extend into late April. I think that threatens that this deal was always predicted to be consummated by the fiscal year end of Microsoft, which I believe is sometime in that April, May, June timeframe. So we'll see if they're able to close on that deal. Now, that Microsoft Activision buyout case got a pretrial hearing on January 3rd. That was just a couple of days ago. This is just a pretrial hearing where really you're just presenting the information that we already know, but we'll see where that materializes in the coming weeks ahead. Now, why did Microsoft drop today? UBS slashed its rating on its cloud worries. When you go over to the chart of Microsoft, boom, it really did fall off a cliff. It went from 240 stock down to lower than 230 after this downgrade, as those cloud worries, something we've talked about here on the channel just briefly based on the headlines that we're seeing. Microsoft had to sign a cloud deal with the London Stock Exchange, and in exchange for that cloud deal, they actually had to buy a percentage of the company. My guess is because you have Amazon, you have Google, Google, you have Microsoft, you have Oracle, you have a few other smaller players out there. Well, obviously pricing is going to come under contraction. And so while the growth rate probably still there with cloud, I don't know if the profitability is really going to be there in 2023 and really beyond. Microsoft reportedly in advanced talks to invest in autonomous driving startup Gatik, I guess. This would be a pretty big funding round where Microsoft ponies up about $10 million on a company that is projected to be worth maybe about $700 million. So that actually would be a relatively large chunk of that company. Microsoft is reportedly building a version of Bing that uses the tech behind ChatGPT. Now, ChatGPT is getting all the love right now, similar to like maybe a Clubhouse was a year or so ago. We'll see if it's able to continue the momentum. I tell you what, those of you that were, my age or older and remember kind of the dawning age of search engines, know that Google was never the best search engine, okay? I would argue probably like Alta Vista might have been the best back in those days. Yahoo certainly wasn't the best. Search technology is more about access and it's more about marketing, obviously. And at some point, you have to churn a profit. We'll see if ChatGPT kind of evolves into that. But my guess is that sites like Bing and certainly Google as well will, obviously these companies are already utilizing AI. If you do certain searches inside of Google, you get artificial intelligence already kind of presenting certain kind of snippets of information for you. My guess is Google can just continue that moving forward. Moving on to Tesla. This one bounced around quite a bit. I think it hit a new 52-week low only to finish the week basically flat, starting the week at 114, ended the week about 113. Lots of news with Tesla as it set a record with 405,000 plus deliveries in Q4. However, that did miss estimates that were closer to about 420,000. The company finished the year delivering about 1.3 million vehicles. That was good for 40% year-over-year growth over at Tesla. Now, Morningstar chimed in and said that Tesla is likely to deliver more than 5 million vehicles by 2030. So we're looking about 7 years later. We're supposed to about 3x the number of deliveries that the company has already. China, a major story over at Tesla, as it appears that the vehicles are starting to slump, mainly due probably because China's economy is continuing to slump a little bit. The company delivered 55,000, almost 56,000 China-made electric vehicles in December. That was 44% month-over-month decline and a 21% drop from a year ago period. So what did Tesla do? They decided to cut the prices over in China. You got about a 13 to 24% decline in prices for those Chinese vehicles. We'll see if Tesla is able to spur some demand by reducing the price. I do respect that about Tesla. Do respect that about any company, is when you see demand start to falter a little bit, what do? You cut the price. And the fact that they do that so quickly over at Tesla, I actually think that's pretty cool. Now, might not be the best thing for shareholders, but we'll see moving forward. 2022 marked the worst showing for U.S. car sales in over a decade. Projections at the beginning of the year was for 16 million vehicles sold in North America, just 13.7 vehicles sold in 2022. We'll see if it will bounce back year in 2023. Moving over to the technical segment of the show, we'll pull up the S&P 500. We are stalling out. The stock market's basically gone sideways for about a month now. We have talked about for the last 6 months, we're probably going on closer to now 7 months, the stock market, when I'm referring to the S&P 500, has been in a 13% trading range. That's represented by this dark blue box. We are still setting up kind of towards the high end of that. We're still waiting for the stock market to really break out, likely of this 13% box that we've been trading in. We're looking for maybe a break to the upside or a breakdown and kind of just retest the lows that we made back in October. Either side, I actually think would be exciting. I think you retest these lows back in October. Maybe you drop back, make some newer lows. That would be exciting. Could be the final kind of exhaustion of this longer downtrend that we've been in since last year. You break to the upside, it could basically signal that these were the lows back here in October, and what you're starting to set up is kind of new series of higher lows and kind of a pivoting at this area. Obviously, with earnings coming up over the next couple of weeks, that's one thing that could stretch this thing one way or another. Now, speaking of stretching touching one way or another, Meta stock has been on absolute fire. So we talked about last week that we were making some beautiful series of higher lows on this one, not really confirmed with higher highs, although we confirmed it this week. This is starting to look a lot like Netflix did after its major drop and its finally major rally over the last 6 months or so with Netflix. Meta looking like it's doing the same thing. Now, it is going to run into an area of resistance up here somewhere. This green line's not drawn in here perfectly. I mean, you can fluctuate this a number of different ways, but it looks like this one's going to walk back up to kind of the 130, probably closer to 135, maybe even 140 range. If you can bust out over that, you've got an area of resistance really up here all the way up to about 150. I tell you what, this one could rally into the 150s before it really meets some selling resistance. Again, Meta reports their earnings February 1st, so we'll see how this one decides to set up heading into those earnings. Moving over to Apple, this one finally touched or became very close to touching our purple line right here. And this purple line's not drawn in here perfectly, but somewhere down here in the low 120s for Apple was kind of the first area where we got maybe a little excited about this one. Momentum still very firmly down on this stock. Longer term investors anywhere between 115 and 120 on this one, probably not going to have that big of a problem considering the buyback, the cash flow, all those types of things. Again, we've got Apple earnings likely on February 2nd. Moving over to Amazon. This one's just hovering in our green box. We've had this green box on the, I talk about this green box for about 6 months here on the channel, anywhere from where the stock is right now up to about 105. This is the consolidation area. Now, the volume profile with Amazon, you'd almost have to stretch it back a little bit, and then you get a better idea. People are accumulating this stock at this price. So if you have a long-term vision on Amazon, certainly can be an area where you can accumulate this stock. But again, I talked about how I don't think the earnings, which are coming up on February 2nd, are going to be anything that great for Amazon, but it could be that that's already priced in. When you look at the decline on this stock, bad earnings might already be priced in. Moving over to Netflix, which again is looking a lot like Meta these days. This stock's just making a series of higher lows, higher highs. It has a very firm resistance level up here at about $330, but from a volume profile perspective, at least in the shorter term view that we have here, if you stretch this out a little further, you're going to see there's a lot of volume at Netflix stock, basically where it's at and a little bit higher. So in order to kind of really break up over that, it's probably going to take some positive news. Again, Netflix reporting their earnings on January 19th. It looks like it's going to set up at the top of the range. Even if it gets rejected, they have kind of a bad report, miss some subscriber numbers, not that big of a deal. I mean, this thing could retrace all the way back down here to like 250, and you're still kind of in this big upper channel. So until Netflix breaks out of that, the trend still appears to be moving higher. Moving over to NVIDIA, this one, like we talked about last week, met some resistance up here at 192. Not at all alarmed from a technical perspective on this one as it makes its way back, maybe back test this red trend line. I think more specifically, there's this like darker green line here confirmed by this volume profile right in this like 125, 130. This one looks like if the market continues to be weak or the chip sector remains weak, well, you've got this area here that should act as some support. Again, this company doesn't report their earnings until February 22nd, but you do have Intel and AMD reporting, and this stock tends to trade off the news of those. So depending on how that goes, we'll see how this one reacts. You break through this 130 area, and yeah, it's really ugly from a technical perspective with NVIDIA, but for the shorter term, this one's actually holding up and looking okay. Moving over to Google, this one's at the bottom of a channel. Anytime over the last year or so, the stock has been at the bottom of the channel. Occasionally it breaks through. A couple different times it's broken through for really just a couple of days or a week or so. Well, typically you're followed by some kind of rally, either to the middle of the channel, which would take you up to about 95. If you get to the top of the channel, maybe closer to about $100 per share. That's what we're really looking for with Google. If it doesn't, this one could have a very, very large drop back down to probably maybe as low as about $50 per share. Google reports their earnings on January 31st. Investors are going to be looking for signs of growth or signs of recovery from Google. Moving over to Microsoft. Let's talk about how last week's show. We've got a green box on Amazon. We've got a green box on Microsoft. I think we even got a green box on NVIDIA as well. Anywhere between 195 and up to about where the stock is right now, 225, 230 on this one. Obviously, towards the top, it's not like if you wanted 10 shares of Microsoft and it's the top of the zone, maybe you buy one. If it gets closer to the bottom, that's when you buy maybe 5, 6, 7 of them. Still towards the top, still up here at about $225. Microsoft reports their earnings likely on January 24th. This one, from a technical perspective, we do have this kind of gold line, which kind of divides our very, very well-defined downtrend in this stock. It looks like you've broken through that. I think you're retesting these lows back here at 214 on Microsoft. That's $10 lower. If you break that and this technical pattern holds, tell you what, we're probably going to get this at the bottom of the box. There is some volume profile that should support this stock at, we'll call it between 205 and up to about 215 on this stock. It should hesitate in this area. This is probably the first area if you want to add to a Microsoft position or start one. 205, 210 would be where I'd be looking at with Microsoft. Moving over to Tesla. Do we have any signs of life with Tesla yet? Not really. This is still not just a falling knife, but a falling rocket out of the sky. It is trying to hesitate at this level right about 100, 110. There's not a lot of accumulation at this stock at this level. It's much, much lower. We're talking about like $20 or $30 on this one. Tesla does report their earnings on January 25th, so we're just really about 3 weeks away on this company, but we do have delivery numbers kind of telegraphed. We likely have the margins. We likely have profits pretty well telegraphed by most analysts. It's really those forward projections with Tesla, and we'll see how those comes in. And obviously with Elon Musk and Twitter, any kind of clarity there or any cleanup there could give some, at least maybe not momentum for this stock, but allow it to hold this level. Because I tell you what, if Tesla does not hold this level, well, you are coming much, much lower on Tesla. My advice to anybody out there that is holding shares of this stock, you got to put in a stop loss. I would say maybe $5 under $100. You wouldn't want to see this get there because chances are you're coming to the peak of February 2020, likely if that happens. I got stopped out of most of my Tesla shares. I lost maybe $1,800, which is not a lot to me financially, but in an IRA account where you're only allowed $6,000 in deposits, $1,800 really going to set me back. If you're going to ride and die with Tesla, I tell you what, it could be a bumpy ride going forward. But if you look at Netflix, you look at Meta, these stocks will rebound at some point. And certainly from a valuation perspective over at Tesla, certainly looking a lot cheaper, not necessarily cheap from a car manufacturer perspective, but certainly looking a lot cheaper than it did just a couple of months ago. Hopefully, guys, enjoyed today's video. We'll obviously be back next week. On Friday, we've got bank earnings. We've got JP Morgan, Wells Fargo, Bank of America. I'll get to a few of those before the Friday recap. And then obviously after next week, if you've been missing me here on the channel, you'll be seeing me almost every day as we've got earnings heading into the month of January and February starting next week. Hopefully, you guys have a wonderful weekend out there. Stay safe, and we'll see you again next week. Good luck with your investments.